Good afternoon, ladies and gentlemen, and welcome to the TRACKWISE Designs PLC investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Philip Johnson, CEO, and Mark Hodgkin, CFO of TRACKWISE Designs PLC. Good afternoon.
Good afternoon.
Good afternoon, everybody. So Philip Johnston here, I'm the CEO of TRACKWISE, and on my right, Mark Hodgkins, and we're here to represent TRACKWISE Designs PLC. So TRACKWISE is an established UK manufacturer of specialist products using printed circuit technology. We're here to present to you Project Orbit, which is the requirement for us to increase our IHT manufacturing capacity. IHT is improved harness technology, which we'll talk you through, and this desire to increase our capacity has been triggered by a recent contract win with an electric vehicle OEM. But also future demand for our other verticals, medical and aerospace, which I'll again go on and talk to you about. Our vision is to be the preeminent interconnect partner to the world's leading innovators.
We have two divisions. We have the Advanced PCB Division and we have the Improved Harness Technology Division. Improved Harness Technology is the manufacturer of length unlimited, flexible, multi-layer PCBs. Our markets include electric vehicles, medical, aerospace, defense, industrial controls, and telecoms. The business was founded in 1989 and has 106 staff and growing, and based on two sites, one in Tewkesbury, one in Stevenage. For the 10-month period to the end of October of this year, our adjusted EBITDA was 597,000. Here's a diagram of our strategy. The traditional business of TRACKWISE Designs is the RF division, which is now part of the Advanced PCB business. The cash flow and the profitability of that division over many years funded the development of IHT. 2 years ago, we floated on AIM to raise further capital, again to increase our capability and our capacity for IHT, and we continue on that path now. And of course, the aim is to deliver some shareholder value. So just talking about the two divisions a bit more. The Advanced PCB Division, a full product suite of PCBs, has been trading for 50 years. Its markets are industrial controls, communications, which is telecoms predominantly, medical and aerospace. Since its acquisition in April, it's been cash generative, and it trades from a 5,000 square metre site in Stevenage. In Tewkesbury, we have the IHT division. This is where our proprietary patented process has been developed for the last 9 years, and where we manufacture multi-layer flexible printed circuits of unlimited length. They are lighter, smaller, and more functional, and they are a potential replacement for traditional wire harness in a wide variety of applications. Their primary target markets are EV, medical, aerospace. We trade from a site which is 1,812 square meters. Just a little bit more about the Advanced PCB Division before Philip goes on to talk about the IHT business. So we manufacture microwave and radio frequency in Stevenage, as well as short flex, flex rigid, and rigid multi-layer. The acquisition of Stevenage Circuits strengthened the business. It added customers, products, capacity, and capability, and also gave us additional cash generation. We have over 100 good customers, predominantly in the UK and France, and UK and Europe, I should say, and about 37% of our business is exported. We have a number of large repeat customers, which you may have heard of, Qualcomm, Leonardo, I'm sure you've heard of. Iron Science, which you'll see on the right, is a UK-based manufacturer of advanced gas sensors and gas detection equipment. And Alpha Wireless, which is a customer of TRACKWISE now for many, many years, which manufactures telecom equipment mainly for the United States. The Advanced PCB division has a good pipeline and has a strong outlook. We've got a good customer base. We think that IoT, the Internet of Things, will drive industrial controls demand. We think the 5G mobile network rollout will drive telecoms demand. Medical is a growing sector for all, and we've got a pipeline of possibilities for Stevenage in excess of £3 million. In fact, it's more than that, but they're not orders. That's what we're chasing down for next year. We think the IHT and the Advanced PCB divisions are complementary. They have similar capabilities. The know-how that we acquired when we bought Stevenage has been very useful to us. They have got a lot of experience, and they've got some very long time served engineers. And of course, the cash flow, as always, is very useful.
Yeah, thank you, Mark. So the Advanced PCB division, as we said, is the foundation upon which the growth of the business is based, and that growth is going to come from improved harness technology or IHT. So IHT, improved harness technology, is the manufacture of length unlimited multi-layer flexible printed circuits. This is proprietary patented technology. You'll see at the bottom of this slide that the patent is well underway and being granted on a worldwide basis. Only Brazil is the application is pending. So the technology has been developed specifically as a replacement for conventional wire harness, primarily as a weight and space saving, but other benefits which I'll go on to describe when I talk about some of the target markets and target applications. So as we say here on the slide, demand is growing across industry, but for lighter, smaller, and more functional interconnect. So weight is the primary saving benefit, and for any mobile application, weight is fuel, which is cost, which is carbon. Well, we just go to the next slide. So thank you. Yeah. So. And for two of our three primary target markets, automotive and aerospace, these are undergoing fundamental change, primarily driven by the carbon reduction agenda. So automotive regulatory change is driving EV adoption. We've recently seen in the UK that the UK government has brought forward from 2040 to 2030 the complete phase out of internal combustion engines. In aerospace, this is more self-driven, but for example, here the UK aviation industry has pledged to reduce its emissions to net zero by 2050. So for both of these mobile applications, I say weight is fuel, is cost is carbon. So the IHT weight saving, 50, 60, 70% or more weight reduction is a definite and strong carbon reduction enabler for our customers. Okay, thank you. So I'll go on to describe the three principal market sectors. So electric vehicles. I think we're all fully unaware that automotive is going through a fundamental change, internal combustion being replaced by electric power. So in electric vehicles, cells are built into battery modules. So the image on the bottom right of this slide is the main cell format, cylindrical cells. So many hundreds of these are typically grouped together to form a battery module, and individual modules are connected together to form a battery pack. So the artist image on the top slide shows the fairly typical flat rectangular block of many hundreds of cells connected together to battery modules and battery packs. So the flat planar nature of these battery modules, contained with the many hundreds of very precisely defined, precisely repeatable cell interconnection points, make this a really ideal use case for flex PCBs as interconnect. So I'll go on to describe on the next slide the signed contract that we have recently signed, but I think it's worth looking at the slightly wider picture, the wider opportunity in front of the business. I think you will all have read about the plans to build one or more gigafactories in the UK. British Volt is just one name that making quite a lot of noise in this respect. The output of this, the output of any gigafactory is the individual cells, and these cells are going to be built into UK battery modules, into UK battery packs, and into UK electric vehicles. So the wider opportunity for TRACKWISE, with its niche manufacturing capability and first mover advantage, is to get between the output of these gigafactories and the wider opportunity of UK electric vehicles. So onto the contract that we recently signed. So last month, or was it? No, it's 2 months ago now. TRACKWISE signed a 3-year manufacturing agreement with a UK EV OEM worth up to 38 million. The terms of the contract, or the guaranteed minimum volumes within the contract, from which the value of 38 million is defined. The precise terms within the contract, which do provide for payments to the company in the event of the customer not delivering on these guaranteed minimum volumes, and the fact that there are annual price revision terms within that contract, do mean that the lawyers have encouraged us to put up to in the declaration of this contract. So the TRACKWISE is supplying two parts into the battery module. So the OEM is building commercial vehicles, a range of commercial vehicles, and they're all built around a common battery module. So many tens of these battery modules go into the vehicle to form the power. TRACKWISE is providing 2 parts into each battery module. So key components into a key building block for this very exciting OEM. The OEM is going to be building its vehicles in modular microfactories rather than a centralized location. These are relatively small modular facilities to be built close to the end customer. 2 are currently being built in the UK, and a recent announcement advised of their first in the US. The company has also advised of their intent to build 1,000 of these globally. So in our opinion, the guaranteed minimum volume in the contract is likely to be just that, as the company goes through a significant growth program. So next slide, please, Mark. Actually, I think we need to go a couple through. No, you keep going. Yeah. You go. Yeah. So Project Orbit is in response to that contract win. So as a result of that, the facility that Mark and I are speaking to you from here in Tewkesbury was always intended to be an engineering-led new product development, product introduction facility, and the scale of the contract and the rate of demand from the customer, defined by the customer, means that we need to bring additional production capacity on stream by Q4 next year, roughly a year's time. So Project Orbit is to provide the funds to allow us to do that. So that is going to scale up, a scaled up version of the roll-to-roll manufacturing capability that we have developed and qualified here in Tewkesbury. Very same or similar equipment, but this time, instead of being able to cope with the high mix, low volume that typically we're producing in the facility here, it's going to be set up to do the low mix, high volume necessary for this contract. We have identified a new leasehold facility just south of here, 15 miles south of here, immediately adjacent to an M5 junction. Whilst it's still subject to contract, the premises is being built, and because it's a new build, we are able again, subject to contract, to provide our input to that build. As I say, that there's an outline plan at the bottom of this slide, but the intent is that we will be fully operational by this time next year, which will give us the capacity for this this transformational contract that we signed last month, as well as the near-term pipeline. And now what I'd like to do is to just step back a few slides to talk to you about our other verticals. The reason that we need to free up some further capacity here at in the site in Tewkesbury is that we've got a very wide and very important and rapidly growing pipeline of opportunities in other sectors as well as electric vehicles. So medical is a very interesting opportunity. So quite different from electric vehicles, and but is another indication of why improved harness technology. I think we won't scroll back to the front of the slide, but the front image on our slide, which you can get from the website, shows the very narrow. So yes, you can see that the front page of the presentation shows some roughly 2 mm wide circuits that we're producing. Each of those contains 8 individual tracks about the width of a human hair. So 8 of these flexes go into a single catheter. So if the customer is not making those by flex PCBs, they're making them by micro wires. So really tiny gauge micro wires. And I think one can all imagine the complexity and the difficulty of making individual micro wires. So in this instance, the improvement that is offered by improved harness technology is not only a reduction in space, but also an improvement in manufacturability. We've given you an indication of the size of the market here. So just the US catheter market alone is currently worth about $2 billion annually, and forecasted to double by 2025. Now, not all of those catheters are electronically enabled catheters, but we are selling products to 2 very large US OEMs, multi-billion dollar industries. As I said, 8 of our flex PCBs go into a single catheter. We've quoted the customer for 1 million pieces of these products a year, and so that one product for that one customer alone is a multi-million-pound annual opportunity. Relatively early days in the pipeline, so we have delivered samples to the customer. They built them into catheters, and they've confirmed that these are working as planned. We anticipate further larger orders as this progresses through their trials and through regulatory approval, and again through discussions with the customer. We're anticipating a 2022 start of production. We have got a second order for products in manufacture downstairs at the moment, and also working with other catheter manufacturers, including a very interesting European developer for this product. So whilst it's relatively early days, due to the size of the market, the size of the customers that we're working with, and the relatively quick speed to market, we see this as a very interesting opportunity, and again why we need to increase the capacity or retain the capacity here in Tewkesbury. Thank you, Mike. So aerospace is where the IHT journey began. So as a result of an approach by Rolls-Royce Aero Engines, who were looking to replace the wire harness inside their aero engines with flexible printed circuits in order to save weight and in order to save space. And so fundamentally, TRACKWISE and IHT is looking to change the way aeroplanes are wired. Now, that is a large ambition for a small company, and I'm sure as a skeptical investor, you think this is going to take a long time to make happen. As a larger shareholder, I share that concern, But we have been, for example, we have been working with GKN over many years. Last year in 2019, we signed a collaboration agreement with GKN specifically on their wing ice protection system, where GKN are the incumbent supplier into the Boeing 787. Now, the collaboration agreement is for the industrialization of their next generation ice protection system, and really is the final development step prior to entry into service. And again, through discussions with the customers, that is that in their opinion 2 to 3 years away from entry into service. So really, in corporate terms, not a long time frame, and certainly within the planning timeline. So GKN, the route to market through GKN is probably our best route, best entry into mainstream aviation. But we highlight here 30 plus aerospace OEMs and suppliers. We've had another one added this week, and this represents a really wide range of UK and international developers of next generation products. So UAM, unmanned aerial mobility. They're actually not all unmanned, but UAM is a fairly widely recognised acronym. Business jet developers. The image on the bottom right is of work we're doing with Gulfstream on some lightweighting of an interiors, and then also with HAPS, so high altitude pseudo satellites. So these are very large wingspan, unmanned vehicles that will fly 60,000 feet for 3 months, solar powered in the day, battery powered at night, and will fulfill the function of any function that a satellite will do, but at a fraction of the price, and you can always fly your aircraft down if you need to change the payload or whatever. So, yes, so aerospace is where the IHT journey began, and as I said earlier, really the weight saving is the key, but by no means the only benefit for aerospace. And the indication, this is a very large market sector. So the metric we use is 1% of an aircraft sales price is wire harness. So so those are the three main verticals: electric vehicles, medical, and aerospace. But then I also want to talk to you about some the other markets, the other applications that we're also addressing, some of which are very significant in scale. So when we came to since we've been onto the market, the CERN has been a large contract for us, and that has been successfully completed. And coming on soon behind that is with a nuclear fusion OEM. So this is relatively early days for us. We've got development revenues with them. We're just about to start a roughly £250,000 project on the next phase. The image on the top right is for a 50-meter long part we manufactured for them, and I am certain that there's no one else in the world who could manufacture that part for them. So whilst it's relatively early days, our technology is a key enabler for them in their design of their fusion reactor, and as they progress in the scale up of their own technology towards their producing electricity from nuclear fusion, the TRACKWISE revenues for IHT are going to go up by several orders of magnitude. Oil pipeline leak detection is an opportunity working with a Canadian OEM. So this is 30 meters, it might actually be longer than that, but 30-meter long sections of assembled PCBs that sit underneath the pipeline using our customers' proprietary detection technology, and that allows many kilometers of pipeline to detect whether any onset of a hydrocarbon leak. So and the last one I wanted to highlight too, advanced motor winding. So this is a Belgian OEM who are building micro motors, very high performance motors not using conventional wire, copper wire wrapped around a permanent magnet, but using flexible printed circuits. And this allows them to produce much more dense, much more performant motors, but above all, to be able to manufacture them up to 10 times more quickly than conventional winding technologies. IHT both offers them long length, so for some of their aerospace actuator requirements, they require many meters in length of PCBs, but also are roll-to-roll manufacture. So one of the applications we're discussing with them is a very high volume B2C application, and our ability to manufacture and deliver to them products in roll is a key enabler there. So that is a very significant opportunity. I've been personally working on that today, and one that I'm very excited about. The last, so all of these products I've just talked to you about to date so far have been our customers' IP. So we're manufacturing our products for our customers' products for them. However, the IHT technology and the PCBA that we're selling to the oil pipeline leak detection does allow us to produce our own branded products, the potential to deliver our own branded products, both B2B and B2C applications. And again, whilst this is relatively early days, there are very large target markets for this, and we have a very smart engineer working on these. So, Mark, thank you.
So, as you all know,
Yeah, just keep going. Yeah.
So, as you all know, we have announced a fundraising which includes an open offer, and I have noted the questions that you've put on the board that I will address in the fullness of time. So the offer, the fundraising was oversubscribed. New and existing shareholders took part, and we raised a gross proceeds of £11 million. And this was all to do with increasing the IHT manufacturing capacity and additional growth working capital that were required. The issue price was 200 pence, and I see the questions. It represents a 7.9% discount to the volume weighted average price of 217 pence per share for the period between 18th of September 2020, which was the day we announced the EB contract, and the 19th of November 2020 was the day we announced the placing. We recognise it represents a 45.2% discount to the closing mid-market price of 365 pence per share on the 19th of November 2020. I think, though, we should take note of the fact that we have included an unusual and specifically structured £1 million open offer for the opportunity of existing shareholders only. And I think it's important to note that shareholders taking part in the placing and subscription are not entitled to take part in the open offer. There are 502,582 open offer shares available, which will raise £1 million approximately at the offer price. And it's only available to a smaller pool of existing shareholders. If there are no applications under the excess application facility, not all of the £1 million would be raised. The excess application facility is not available to those taking part in the placing and the subscription. And the directors, who hold 31% of the business, are not taking part in the open offer. And I know there'll be questions about this, and we will address them at the end of the presentation. So just a little bit on the financials. It's been a difficult year because of COVID for many people, and it has held our revenues back. Two particular difficulties we've had with COVID was getting a machine commission, which was delivered just at the start of the lockdown and couldn't get engineers here to commission it. That held us up and held revenues back somewhat. And our EV customer had a similar problem getting machinery from Italy due to their lockdown, and so their demand came later in the year than we anticipated. So that has held back revenues, and principally has held back IHT revenues. And it's knocked our gross profit back. You can see the margins dropped quite a lot in the first half, as we reported in September. has come back a little bit in the second half now, and that represents, or reflects, I should say, that volumes are beginning to return again, and our machinery is much more profitable when we keep it busy, and so the margins are coming back. As I've already said, our adjusted EBITDA for the year, for the 10 months to the end of October, is £597,000, and our adjusted operating loss is £256,000. I know that our expectation for there is 200, and we're working towards meeting our expectations by the end of the year. There are two principal adjustments to EBITDA and operating loss, and they are the costs of acquiring Stevenage Circuits Limited, and the second adjustment, significant adjustment, is the integration costs of bringing Stevenage Circuits into this group, which is now called TRACKWISE Designs PLC. So you see at the bottom there that there's a profit after tax for the year to date, and that represents an exceptional profit on the acquisition of Stevenage Circuits, where we bought a business of £3.2 million worth of net assets for just about 1.8 million. And as I've already stated, Stevenage Circuits Limited has been a cash generative business since we acquired it in April. Just moving on to a bit on the balance sheet. We had £1.3 million worth of cash at the end of October. That was a bit lighter than we expected to be because Her Majesty's revenues and customs have not paid us, or had not paid us, R&D tax credit, which we've now received, which was £250,000. We have net debt of 108,000, not including the HMRC payment. Our total borrowings at that time were 1.4 million. All of that borrowing is to do with asset finance of machines. We have no bank borrowings at all. We have no covenants. We do have a £600,000 unused invoice discounting facility. That is there really just as an emergency facility, but we have to date not used it.
Yeah, thank you. So to repeat or to summarise, the vision to be the preeminent interconnect partner to the world's leading innovators. I hope the previous discussions have indicated to you that we're well underway down that journey. The first large contract win, up to 38 million, but in my opinion could be worth quite a lot more than that, with a very exciting UK electric vehicle OEM. But 2020 has been and continues to be a tough year for everybody, I think. But we think with the acquisition of Stevenage Circuits, the contract win with the EV OEM, we've made, we would consider 2020 to be a good progress with our strategic objectives. I've described an absolute fraction of the IHT customer base that's growing, a growing pipeline of IHT revenue opportunities. As I say, we've announced the first contract win, and we certainly don't think it's not going to be the last. And I hope I've given you some indication of the pipeline of what's coming. I believe the open offer and coming through investor meets company, small shareholders, individual shareholders are important to TRACKWISE. It's our intent through investor meet company that we provide access to the executive team, and the open offer and this route to talking to you, I believe, is evidence of our commitment to you. So thank you for your attendance and your time, and we'll try and answer some of the questions.
That's great. Thank you very much, Philip. Thank you, Mark. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. Lastly, before I hand back to Mark and Philip, I'd like to remind you that your feedback is important to the company. Immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order the company can better understand your views and expectations. Philip, Mark, perhaps before we look at the questions submitted during today's presentations, we had a number of questions pre-submitted by investors, some of which I think we'll cover off. But perhaps, Mark, I could start with you, and I'll group the first two together because they do relate to that recent fundraising, if that's okay. Just grouping the two questions. The first question we had, the recent placing came at a 45% discount to the previous day's closing price. Many investors feel this discount did not need to be so great given the current levels of interest and enthusiasm around the company and its technologies. What assurances can you give around the pricing of any future placings? Would the company consider alternative means of raising capital such as primary bid? The second question, to sort of tie into that as well, is given the recent share price, do you think the offer price was set at too much of a giveaway level? I know there's a couple of live questions that have kind of touched on that as well.
Thank you, Paul. Mark will answer the question, but can I just say I'm the largest shareholder of the business, and I promise you I have a keen interest in the answer to this question. So
yes, so to answer that question in total, if I can, following the EV OEM contract win, we obviously had to ensure that we had we had capacity for this significant contract, which has such great potential for the company, and to ensure that we had the capacity available for future new contracts as well. The capital raise gives TRACKWISE the ability to roll out this capacity over 2021. Clearly, our aim would be to discount as little as possible. It goes without saying. Philip is the largest shareholder, and I can tell you we had a very hard debate about pricing. I am also a shareholder, and I have been diluted as well, but not quite to the same or in the same size of monetary value as Philip. So it was an issue to us. Can I also though make this clear? For this raise, and I've noticed some questions about EIS, we had no remaining EIS or VCT tax cover. So our raise was to a lot of new institutions. They all knew, they'd been following the company. And don't forget, they measured the value of this business at the start of the marketing exercise, not at the end. And I'll come on to that in a second. They knew we needed to raise the money. They had seen the size of the contract. And so they were in a position of awareness of what we needed to do. I can tell you, we fought very hard for the price. We not only fought with the investors, we fought with the advisors as well. So we didn't give up easily. So as I said, the investors referenced the share price at the start of the process and not at the end of the process. The price in the market at the start of the process was significantly lower when we commenced the marketing. So excluding shareholder placees from the open offer is not a standard feature of an open offer. All shareholders excluding placees, and only those shareholders, have a chance to participate in the open offer. This smaller pool of existing shareholders has a fixed entitlement in the open offer and an opportunity to apply for any number in excess of their open offer entitlements. We don't think the primary bid would have given such exclusivity or opportunity to just a smaller pool of shareholders in the company. We don't think that's right. And we think on balance, we got the offer right at the best price we could. And I would like to say as well, I think everybody on our team fought hard for this. I understand why you have your view about the price, but it's quite difficult to negotiate with investors when they know you need the price. They're hard, it's hard work, and they have their clients to look after as well. So they're doing it for their clients. But I think we did the best job we could do in the circumstances. So,
sorry, Mark, is there any further to add?
Well, there's a few questions on the list with regard to EIS. I'm afraid there's no further EIS availability. We've just exhausted the capacity under the revenues rules, so we can't offer any more EIS shares, I'm afraid.
That's great. Thank you very much. Next question we had pre-submitted is, I'm interested to know how big the threat wireless technologies, open brackets, which is presumably improving rapidly, are to IHT.
Yeah, so I'll take up the answer on that one. So, I think I can I would agree with you that in theory, wireless is a credible alternative to a credible alternative into communication technology. But I can genuinely say that in my however many years, 9 years of discussing IHT with a very wide range of customers around the world, I've never come across wireless being discussed as a competitor to IHT. So I don't disagree with the concept. I just don't see it impractical in the market. I can't say more than that.
That's great. Thank you very much. And the final pre-submitted question sort of forms about 3 parts. So I'll read out the first piece and then just put to the questions, if that's okay, guys. In the very recent Open Offer Circular, November 2020, under risk factors, then customer concentration, you state that in 2019, your top 4 customers accounted for 27% of revenues, down from 42% in 2018, due to the much larger number of IHT customers in 2019. An apparently related statement made in your first half 2020 results document under operational highlights, where you say increased IHT total customers and opportunities to 82 from 57 in 2019, and 10 NDAs signed in the period to commence design phase of potential new customer orders, building a pipeline of future revenues. A, can you tell us what the difference is between a customer and an opportunity and their relative proportions among the 82 cited in H1 2020? B, can you tell us something about transitioning from the design phase to customer orders of substantial size? Even though you highlighted risk of total revenue to be dependent on a few customers, it seems that a converse risk might have been many small customers, each requiring special attention and thus potentially reducing profit margin. Can you tell us something about that? And the final part to the question, I assume that producing large volume orders, many of the same unit for one customer, scales in such a way that your profit margin increases. Is that correct? And can you give us a rough idea of the amount of profit you might expect to make from the large customer in the 38 million order to the UK EV OEM?
We could probably spend most of the rest of the evening discussing the answer to that question. So I think that dealing with the difference between customers and the pipeline. So customers are purchase orders and purchase and invoices turning into cash. So that is our definition of a customer. So that the opportunities is defined by people who have exchanged an NDA with us. So that tends to be the first step after an initial discussion. So an intent to proceed beyond some initial discussion. So that's deals with that. So one thing that I think it's worth highlighting is that we are providing a manufacturing service. So I've described to you a very wide range of markets and applications and customers. And one of the good things about the manufacturing business and the service that we're offering is that a common set of manufacturing assets allows us to address these very wide range of markets and opportunities. So we indeed are engaged with a large number of, for example, aerospace customers. But the big part of that is that the voice of the customer, the voice of these various customers, is feeding into our development of the technology. So I've forgotten what the other part of the question is.
Well, the other part's about margin.
Okay, yeah. So yeah.
So just moving on to the margins point, I don't really want to discuss the margins publicly. Our customer is an automotive customer at the end of the day, and they would love to know what our margins are. It's something I want to keep very quiet. Having said that, we do invest quite significantly in automated machinery, and it is our aim to invest more in automated machinery, and we will become a more machine-intensive business compared to our competitors, who will be more labour-intensive. And it's true to say that as volumes improve and as we keep the machines more busy, that our margins should improve.
Yeah.
And we do expect to see margin improvement, and we would like to think that our margins could be quite significantly ahead of what we have disclosed in the past.
Yes, Mark has said, the incumbent technology wire harness is still very largely a handmade item, and so therefore it's got a high labour content. Our manufacturing process under development and being scaled up in the new plant is a machine-intensive manufacturing process. So the harder we work the machines, the harder the work of the machines, the higher the volume, the more cost competitive it's going to be, or equally the higher the margin is going to be. So it's certainly the intent with our, and one of the positive outcomes of this new plant is that we're going to be able to manufacture at higher volume with greater efficiency, which makes us more competitive in the market.
That's fantastic. Thank you very much. That does conclude the pre-submitted questions. And I know I haven't given you a huge amount of time to scan through those questions submitted during the live event, but if I could just perhaps ask you to start at the top, just read out who the question is from. Sure. And the question itself. I know some of which we covered off in the with regards to the transaction. Over to you.
The first question is from Rob B, and the question is, what are your EV and aerospace customers saying about adoption of our technology given COVID headwinds? Do you see program delays in 2021?
Thank you. So I think aerospace is the one that is aerospace is the one that I think is most obviously been hit by COVID. But I think that is predominantly on existing programs, existing builds. And I think, as I've described to you, IHT is really about future programs. So in answer to your question, I would refer you to Melrose, who own GKN. So Melrose are concerned about the impact of COVID on their business. They're conserving cash, but there's a paragraph in their latest update about how they are continuing to spend on R&D on future programs. So I think there's no doubt that on balance, COVID hasn't brought anything to the left. It's only brought, to push things to the right. So in general, I think the answer to your question is it has delayed programs. I don't say it's possibly brought things forward, but I would refer you, the example of Melrose and GKN is that there is the commitment to future programs, which is really where IHT is involved in.
The next question is from MP, which really reflects or refers again to the share price. The question is, the share price since your placement announcement must make you question whether the price of your placing was a mistake. Please, can you explain how this is a fair price from the perspective of shareholders who have purchased shares north of £3? I think I've addressed that both in the presentation and in the answer to that question earlier. We don't think it was a mistake. We negotiated hard for that, and the providers of the money on the other side also negotiated hard. There was a risk that we wouldn't have been funded at all, and I think the work that our advisors did towards the end of the process got us funded. I think that's the best we could have done, to be honest with you.
And there were some investors who were wanting to offer us money at a lower price.
So the next question is a similar question from Tim G. The director should be commended for including an open offer to accompany the placing, but given the huge discount offered with the placing, it is woefully small, 1 for 44, and will most likely be oversubscribed. Why didn't you cut back on the amount offered in the placing and allocate more to the open offer? For example, double the amount available to satisfy likely shareholder demand. And again, I would refer you to the structure of the excess offer. If you take a quick trawl through our website on our key shareholders, you will see who is likely not to be taking part in this open offer, because they are prevented from doing so. And I think you will see that the smaller pool is indeed quite small. And I think you should have quite a lot of freedom to bid aggressively. I did get one question over the telephone in the last few days from someone who suggested that the private investors could have funded the whole thing at £3 a share. And I worked out that each private investor that we have on our register would have had to have given us £135,000 each. And if I'm honest with you, I'd be delighted if you could, but it's a little bit risky as a finance director to rely on that. I don't think it's not a credible position to take, if I may say so. So Jason B, how much revenue will your planned capacity expansion enable you to bring in? Can you say that?
Yeah, so we think that the current raise will give the group, so the 3 sites, around a £50 million capacity.
Yeah,
right?
yeah, that's about right.
I think in round numbers. That's the figure we've got in mind. So
Graham F asks where strategic partners sought for funding rather than placing, and to which the answer is no. We felt that having a strategic partner would be limiting, not helpful. It would probably reduce our ability to be a supplier to many others. We thought it would damage our freedom in the marketplace, to be honest with you. So no, we didn't. And also, we have quite a large number of shareholders say to us quite regularly that we should stay independent. They really do want us to stay independent. In fact, I'm sure some of the people on this call now, I've had some emails from them that have suggested that we should stay independent. So the next question is from Tim G, which is really another question about the discount. But he does finish by saying we should look for another broker. I have to disagree with you. At the final knockings of this placing, I can tell you that we probably woke up in the morning before and we weren't funded, and they worked extremely hard to get what we got. And in the end, they broke the back of the investing institutions, who then came in rather hard. But I just don't agree that the brokers are at fault, I'm afraid. It's just not right. Graham F, is this Project Orbit ambitious enough considering the company's market opportunities?
So Graham, if I could borrow your crystal ball, I'll A, pick the Euro Millions numbers tonight, and B, answer your question. We who knows is the answer. So I think the UK EV OEM has got, I think as described, has got ambitions and opportunities in the US. In our opinion, and then it of course only can be an opinion, that the size of the scale up that we have chosen is appropriate. But I'm sure if we'd done 5 times the size, somebody else would have said, "You sure we haven't been too over ambitious?" And we as directors have obviously have to consider the risk mitigation as well as the upside. So I've really no idea the answer. I'm personally very interested to see how this plays out. I hope that the slides have indicated to you that we've got massive opportunities in 3 huge sectors. So
if you go to our website, on the investor page, there is a link to the brokers' research papers, FinCap's research papers. You can go on there and you can see the recently released paper that will give you an idea of what they think our results could be in 2022. And that, I think, might go a little way to addressing your question about, is it ambitious enough? We've told you today and in the RNS what the total size of the EV contract is. It's relatively simple math to extrapolate that through. I think we've given a good indication today about what the medical opportunity might be worth. I think Philip said earlier that one product for one customer is a single millions revenue number per annum, is what he said. I think those snippets of information, if you look at the research, will tell you a good part of the answer for whether it's ambitious enough.
So Tim G.
So the question is, you mentioned that you expect medical instrument manufacturers to be among your larger customers. What sort of instruments do you envisage IAT will be used for, and what advantages will IHT bring? Will it be performance, miniaturization, cost, or other?
So Tim, I think I've answered some of that in the presentation, but I think so. We are facilitating any medical catheter that requires some kind of electronics to be at the tip, what they call a distal tip, and then being connected through the body to outside, so that the surgeon can see what's going on or operate. I think in the slide, as I said, is that everybody in all modern systems are requiring a greater functionality in a smaller form factor. So in my opinion, if my assessment is correct, miniaturization is a key there. So because the customer wants, put down 64 micro wires, 64 connections down their flex, they now want to go and put 80 or whatever. So it is miniaturization, but I've also described that the total cost of ownership, in other words, the speed for them to manufacture is the key facility there. So.
Okay, the next question is from Quentin B, but it's the same question about thinking behind the 200 pence fundraising price. And if I may, I think I've answered that already.
So Tim G, apart from catheters, are there any other medical device opportunities using IHT? I would have to be careful what I say, but one of the opportunities in the other markets is a B2C medical opportunity. We've also supplied parts into a medical scanner. So yes, there certainly are other opportunities, but I think given the size of the catheter opportunity, and I think that the fact that the very large American OEM has come all the way from California to TRACKWISE to buy the product parts from TRACKWISE give an indication of the special capability that we've developed here.
And then another question from Tim. Are you aware of any other companies, including Chinese companies, who are making any progress in developing IHT using technology which gets around the TRACKWISE IP? How do you monitor competitor activity in this area?
That's a very good question, Tim, and one that is raised by our board at every board meeting. So we're acutely aware of competitive advantage. I think the short answer is no. And I would say that I wouldn't get too, so you actually say that TRACKWISE gets around the TRACKWISE IP. So the patent is just one thing. It's the public facing competitive barrier, and does allow us to send a cease and desist letter if we do find somebody who's likely to be infringing the IHT patent. But so I filed that patent in February 2012, and the business has just immeasurably different since the date of filing that patent. Our knowledge, our know-how, throughout the entire DNA of the business is hugely changed. So really the know-how and with your support as shareholders, really the advancement of that know-how and the first mover advantage is our competitive advantage. We are very inquisitive with our suppliers about who else is active in this space. I was going to say something else there. Sorry, I'll try and think about that.
Shall I move on?
Sorry.
Tobias M, question from Tobias. Sorry, I can't read that. Clearly, the £12 million placing was to fund the new manufacturing facility along with the EV contract. However, given you expect to quadruple IHT production capacity as a result, then why did you not raise more? Clearly, there are a number of contracts in the pipeline that you have discussed, and these will undoubtedly require additional capacity. Then would it not have made sense to raise more now? But do you want me So we think actually we have future-proofed the business for what we know, and so when we've talked about medical and the other stuff, we think we've future-proofed the business for that. We have not future-proofed it if we were to get another £38 million contract, but there's nothing in the pipeline like that. So we think we've got sufficient capacity to deal with the opportunities that will come to us through the other verticals that Philip has been talking about. And that slightly oversubscription, part of my thinking at the time was that will allow us to put another bit of machinery in just to cement that extra capacity, and that's why we took the extra bit.
Yeah, so I was going to make the same point. We did take some more funds, and yeah.
So Tim, I think I've answered your question about EIS VCT. Unfortunately, we've just exhausted. We just can't use that route any longer. Andrew J. Hi Philip and Mark. Refer to my email. Disappointed that the open offer is not larger. Would appreciate comments. I would say to that, Andrew, I think you might find the open offer is quite large enough. By my reckon, there are about 43 private investors who are active and sizable investors on our register. I can't be sure because some people hide behind their platform, but there's quite a lot of space there for people, I think. So I would wait and see what happens, if I may. There's a question from Matt B. What are your customers' primary questions / concerns about the technology when considering replacing the incumbent technology in each sector, EV, medical and aerospace? Is it reliability, costs, etc.?
Again, Matt, I could talk to you over the weekend about the all of the above. Everybody wants cost. Obviously, everybody wants reliable products. But I think as I hope I've described to you, really the weight saving, the space saving, the general trend for everybody to require greater functionality in a smaller form factor at lower weight and lower cost. And I think I think the evidence of large OEMs coming from around the world to take the benefit of improved harness technology, I hope is evidence. Well, I believe is evidence. I know is evidence that those improvements are of interest.
Guys, I'm just slightly conscious of time as well, as we're just coming through the hour. Just for your time as well, just see if there are any other questions. We're happy to carry on if we haven't answered them, but I'll just appreciate your time.
We've got a fair few to get through.
We'll keep pushing on.
So who are our competitors for IHT? That was Martin Silverman.
The incumbent technology is the biggest competitor. We do.
No one we know, isn't it?
Well, no. I mean, so the incumbent technology is the main competitor, Martin. So the no change is the biggest competitor.
Tim G's question: do you think there is a good chance that the nuclear fusion project will ever come to commercial fruition?
I very much hope so. I am very excited about the customer. I'm very excited about the technology, and as I said, we have got a key component for them, which certainly helps in price negotiation with them. I'm be absolutely delighted. Yeah.
So a question from Neville: congratulations on the win. This is a relatively new technology. What testing has been done to test and validate its use in harsh environments?
So Rolls-Royce, who are the original ones so I think the point is it's not a new technology. So a flex PCB is developed since the middle of the last century. It's a multi-billion-dollar worldwide industry. All that TRACKWISE has done is change the manufacturing processes to allow us to have it of any length. So I think the testing, what we're able to do is build upon the heritage that's gone before. And Rolls-Royce, not with TRACKWISE, but Rolls-Royce took this technology through to flight qualification for aerospace.
I'm just going to read this one out because I like it. Mick T says, many thanks for the opportunity to purchase additional shares at £2. You're welcome. Billy Boots is what I'd say. Is it possible to name who the new institutional investors are? I did ask whether I could do that, and I've been told that I shouldn't do that at the moment, but I think you will be pleased. They are very long-term, credible, wealthy investors who will support the business well into the future. Tobias has asked, it sounds like the EV contract is with Arrival. If not, when are you able to disclose this information? We couldn't possibly comment, but if you go on the bulletin boards, everyone's talking about it. John, you asked whether we published the Q&A from the September meeting. I believe it's on our website, so it should be there. So yes, I think we've covered just about all of them. The question about copper prices from John. John, we haven't seen any major impact on copper prices, and in fact, you know, they tend to be quite a lot of it's priced in dollars. So, if anything, it's been a bit of a reduction.
But also our contract with the contract with the EV OEM. I mentioned about the annual price revision. So, if copper goes up or down, that is part of the formula that we will be discussing with the customer.
James, did the EV OEM ask for EV exclusivity to strengthen their vertical integration and USP in the market?
No.
No. Is there a lockup for institutional subscribers from Martin? No.
And Andrew, the 50 million capacity that I mentioned, that is total rather than additional. So across the 3 sites, that's what we think we will be able to achieve.
I think that's exhausted all the questions.
That's fantastic, guys. You've been super generous with your time. Thank you very much, and thank you, I'm sure, for all the investors listening for your time to answer those questions.
And thank you for all coming to the meeting. Yeah. Thank you very much.
Absolutely. And if there are any other questions that come through, the company can review all those questions today and will be published back on the Investor Meet Company platform. Philip, perhaps I could just ask for a final couple of words just to wrap up before we redirect investors some feedback, please.
I would just like to reiterate that the private investors are important to TRACKWISE, and I believe our participation through this Investor Meet Company is evidence of that. And both Mark and I fully understand and sympathise with the question or the tone of the questions with regard to the pricing. As I say, we worked hard for that. What I would just say to you, is, well, since I was an 80% shareholder at IPO, and I was now down to 25%, and I've never been more excited about the potential for the customer and therefore my shareholding. And I would recommend you as I would recommend. I'm not allowed to recommend. Is that what you want?
I'm just going to stop Philip there from recommending what he's going to recommend.
I would suggest. I beg your pardon. Thank you, Mark. I would suggest that you as shareholders consider the growth story that we've put forward, and consider whether you want to be part of it. And I'm certainly very excited. I have discussions with my wife about dilution, etc. I promise you. So I'm acutely aware of it, but I'm as excited, more excited than ever about the opportunity, the growth story for the business. We've delivered this first contract. It will not be the last. And I thank you for your time, and I thank you for Paul for the Investor Meet platform.
That's great. Philip, Mark, you've been very generous with your time. Thank you so much. Thanks for updating investors today. I'm sure it's very well appreciated. Could I ask investors not to close the session, as you will now be automatically redirected for the opportunity to provide your feedback, which is important to the company. If you've accessed the meeting from the website, the feedback page will appear in front of you. Access it via the link sent in an email. You'll be asked to log in and submit your feedback. Do it. It just takes a couple of minutes. Be much appreciated. So on behalf of TRACKWISE Designs PLC, Philip, Mark, thank you again, and Investor Meet Company, I'd like to thank you all for attending today. And thank you. Good evening and very good weekend as well.
Thank you all.
Thank you.